Trading M's and W's might seem easy, but you can never be profitable if you do not do this right. Hang around as Mr. Simon empowers you with knowledge.
Hi guys, welcome back. Hope you guys have been trading well. Alright, so in today's video, I'm going to be showing you how you can trade M's and W's while you stay on the safe side, meaning this is more for more conservative side, not much on the aggressive side. Alright, so it's very simple. As you know, I always get straight to the point. The first thing that we'd love to see, I mean, for those people who understand btmm, we understand that, you know, we would love to see an accumulation phase, which is your aging session, right? And then above and below, right, we have our stop hunt boxes where we anticipate the dealer to trap. All right, we anticipate the dealer to issue a stop hunt, trap traders, and then move the opposite direction. All right, so in this case, if we do have a stop hunt, all right, above, and let's say this is our first leg, what we'd love to see, remember this is more for conservative side, or approach rather, all right, so you need to be very selective, and of course the only way you can get better at doing that is by back testing. All right, so the first thing that we want to see once a first leg is issued, right, would love to see, right, the market close below the 13 EMA. All right, close below the 13 EMA. If we take it to the chart, the 13 EMA is this red line, right, red EMA right here. That's our 13 EMA, and that's our signal line, right, which I'm going to explain as we go. Right, so that's the first thing we want to see. We want to see the first leg being issued. All right, we want to see a close below the 13 EMA, right, giving us the first leg, and then we also want to see a close back above. Right, so this is now a close back above the 13 EMA, right, which then now leads to our second leg, right, and from this second leg, our entry confirmation would be a close below the 13 EMA and the 50 EMA. This will not happen most of the times, but I will explain the reasons why. You know, I prefer seeing a close below the 13 and the 50 EMA. So from this area, this is when once we have a close below and, you know, sufficient candlestick confirmation, we can then you know, look to enter short. And now that's on our M formation side. All right, so if we look at our W formation side, which is on the buy side, remember these are stop hunt boxes below, so we expect the dealer to trap below, giving us the first leg. And remember what I said, would love to see a close above the 13 EMA, right, and then we see a close back below the 13 EMA and a close back above the 13 EMA, which is then our entry confirmation for us to go long. Right, so very simple, right, but as I said, you need to be very selective on how you're going to approach this, and the only way is to spend, you know, time with the charts, right? There is no, you know, magic out there that can just, you know, get you profitable one day. You need to put in the hours. You need to put in your hours. It's the only way that you can understand this. All right, guys, so I'm going to take you back to the charts and explain this on the charts, and, you know, the different variations that we can come across after this break.
Introducing our trade copier service. This is a game changer, as we know many of our followers have requested for this service. Get to copy all our trades and finally reach your trading goals without having to stress about analyzing, executing, and managing your trades. A trade copier is a software application that enables traders to automatically copy trades executed by one account to another account in real time, and that is what will be provided to you guys here at MMKFX. This is ideal for traders who do not have much time to catch signals and execute trades. Get in touch with us and be part of the MMK team before we reach our max account threshold.
Hi guys, welcome back. All right, so in today's example, we have USDZAR, right? I'm just going to be sticking to the M15 time frame so you can understand this, as this is, you know, our primary entry time frame, right? But, you know, it's always good to understand what's happening from your higher time frame, right? Very important. And the reason why we do this is because we're trying by all means to minimize our risk, right? So understanding your higher time frame, that's very imperative. All right, so here's an example that we have right here, right? As by analyzing your higher time frame, you'd understand that we had a demand area at that zone right there, right? And as you can see, after we had 1 day of rise, right, not really a full day, I wouldn't really say crazy moves that day, but that was considered a day of rise. And then as you can see, the dealer started the day into a consolidation. If you remember, this is the same example that I gave you guys over here, right? Start the day into a consolidation, issue a stop hunt, issue a pattern, and then you are ready to go. Okay, so as you can see, what we had right here, right after the Asian session, right, we had a stop hunt below the Asian range, and in this case, this happened at our 200 EMA. Now, as you can see, we did have a first leg being issued, right? We had a close above the 13 EMA, close back below, and a close back above. But I was not going to take this trade because I don't really like this W formation, right? I like something wide, right? I like something wide. But if you had moved down to your shorter time frames like your M5, I'm sure it would have been better. But I like this one more because for me, I'd consider this my first leg. As you can see, we had a nice move up, breaking structure, right? And then as you can see, that's our first leg, closing above the 13 EMA, back below. As you can see, we had the market close below the 13 EMA and the 50 EMA. And then as you can see, we had a close above the 13 EMA, which was going to be our entry point, right? And as we combine this with smart money concepts, it's very easy or clear to see that this is a demand area, right? This is a demand area, so it is easy for you to manage your stops well, right? And make sure that you enter the market at the right time. All right, let me just find this chart. Where is this? Sorry about that, guys. I do apologize about that. Let me see if I can find this. Yeah, right about this area right here. Okay, so as you can see, after the close back above, as you can see, the close back above closed above the 13 EMA and the 50 EMA. So that was a very nice trade. If we look at our TDI, right, very clean moves. As you can see, we already had the shark fin. We've got the RSI back in the band, right above the market baseline, and at this area when this was issued, we could clearly identify an entry signal, right? Now here's another example, and this is on the M side. All right, this is on the sell side. So as you can see, in this case, the dealer did play around with people. All right, we had an Asian range, as you can see. All right, we had an Asian range, but in this case, thing is, as I said, you need to be very selective, but this will happen, and as you spend time with the charts, you'll be able to see this. So what the dealer will do sometimes, right, instead of just giving you an information of the bet, what the dealer can do is he can grab the pendings and stops on the other side first. So you can grab this side, right, and then come give you the first leg and continue chopping in that direction. So as you can see, that's what he did on this day. We had a move just below, right? We had a move just below, and that move was actually the previous day low, right? Meaning, there's a bunch of stops down there, right? Fine. So as you can see, those were grabbed, and then the dealer then went towards our entry point, right? A very nice area that we had right there. We had the first leg, as you can see, a close below the 13 EMA. That's good, right? And that pushed price down, giving us not really something major, but a break of structure, as you can see, right? And then we had the price closing back above the 13 EMA and the 50, right? And then as you can see, right, you had an entry confirmation right there, which is that engulfing pattern, right? As you can see, that candle closed below the 50 and the 13, but in this case we had a 22 trade, as we had a second leg of a second leg, so you had many opportunities to enter the market and actually, you know, see a very good trade. Right, so if you're an intraday trader, you can start working around this, right? And, you know, depending on your setups that you look out for. All right, so here's another example. I loved this one because, I mean, this one had a nice supply area just above that area. We had our Asian range, right? We had the burst of price hitting the stops, right? And as you can see, this is our first leg being issued. We've got a close below 13 and 50 EMA. That's fine. Then we are back above the 13 and 50 EMA, and then finally we had a close below the 13 and 50 EMA. And as you can see, the market actually stayed below that 50 EMA. Right, so depending on your targets and your trading plan, you'll be able to manage your trade accordingly. All right, so if we go to another example right here, this is EUR/CHF. This is what you can see. We had an Asian range, not really much, just 8 pips, rounded off to 9. Right, and then as you can see, we had a stop hunt. Right, now the ADR in this is a bit different, right, but that went straight to our stop hunt box. As you can see, that went straight to our stop hunt box. Remember, we always have to look to the left, guys. There's always something the left has to tell us. So this is just an example in the M15. Right, this is just an example in the M15. You know, somebody would argue and say, but I mean, this is the first leg and this is the second leg. I wouldn't really take this because this candle is just too big. All right, that candle is just too big, right? But even though, let's say you held on to this trade for whatever reason and you took a scratch, right, you had another opportunity to pounce on the dealer when this was issued. As you can see, a nice push into the stop hunt box, a close below the 13 EMA, close back above, and finally a close below the 13 EMA. In this case, the 50 EMA was a bit far, so you do have some room, but you need to keep an eye on that because, you know, anything can happen at that area. Price can just continue to bounce off that area. But if you're in line with the cycle, right, it will be very easy for you to identify this and, you know, work a trading plan around this. Right, so the last example, as you can see, this is USD/CHF, right? This one was clean 18 pips, Asian range. We had to move out the box into the stop hunt box, right? And as you can see, first close below the 13 EMA, that is our first leg, right? And then we've got price coming back above the 13 EMA and then back below. I love this trade right here because we had a nice close below 13 and the 50 EMA, and as you can see, this was an amazing trade. All right, guys, if you're new here, don't forget to hit that subscribe button, interact with us in the comment section, leave a like. If you're new here, subscribe. All right, if you'd like, you know, to interact with us, you know, get free setups, free trading signals, and more trading education, do join our Telegram channel. Find the link in the description below. And please note, guys, that that is the only link that will take you to our channel. Any other link that you come across or any other channel is not owned by us, so please do not be scammed. Make sure you only join through the link in our description below.